When establishing or acquiring a business, one of the most fundamental decisions revolves around selecting the appropriate ownership structure. This choice carries significant implications for liability, taxation, operational control, and growth potential. The spectrum of options ranges from sole proprietorships, offering complete autonomy, to complex joint venture arrangements with multiple stakeholders. Each model presents distinct advantages and challenges that must be carefully weighed against the business objectives and personal circumstances of the principals involved. Sole proprietorships represent the simplest form of business ownership, providing undiluted control to a single individual. This structure offers streamlined decision-making and straightforward taxation, but exposes the owner to unlimited personal liability. Partnerships introduce shared responsibility and pooled resources, though they require carefully drafted agreements to define profit distribution, decision rights, and exit strategies. More sophisticated arrangements like joint ventures allow for strategic collaboration while maintaining separate legal entities, often employed for specific projects or market opportunities. Investor-backed models provide access to capital, but typically involve relinquishing some degree of control and equity. The selection process demands careful consideration of several critical factors. Risk tolerance plays a pivotal role, as different structures offer varying levels of personal asset protection. Tax implications vary significantly between structures, potentially affecting both short-term cash flow and long-term wealth accumulation. Operational flexibility requirements must be balanced against the need for formal governance mechanisms. Growth aspirations particularly influence this decision, as some structures facilitate capital raising and expansion more readily than others. Professional advice becomes invaluable when navigating these complex trade-offs. The optimal ownership structure aligns with both immediate operational needs and long-term strategic vision. Business buyers should conduct thorough due diligence on all potential models, examining case studies of similar enterprises in their industry. While no single solution fits all circumstances, informed decision-making in this foundational area establishes the framework for future success. The chosen structure should provide sufficient flexibility to evolve as the business grows while protecting the interests of all stakeholders involved in the venture.